Hey everybody, today is April 28th, and today we're going to talk about the price of Bitcoin. We're going to talk about whether Bitcoin can continue this nice recovery bounce and continue higher, or are we going to roll over and continue down lower. Before we begin this discussion, please read this disclaimer, and you can pause this video as you read it. Okay, so last Monday, our last video, we talked about how we had this nice bullish engulfing candle, which basically showed that we were having a strong recovery, a reversal after coming down this past 2 weeks, right? These past 2 weeks, we failed to break above this Fibonacci resistance level. And I talked about in the past how Fibonacci levels tend to act as support or resistance level, right? Resistance over here and support over here. Then we have support over here, had some resistance over here, but then we came down, retested, flipped that resistance into support, and it moved up higher, but we found resistance over here and over here. And now we're basically been moving in this Fibonacci channel for like the last couple months now, right? And so when we came down and we touched this channel, we actually came just above this Fibonacci support line, bouncing above, and we ended up holding this midterm moving average, which is our gold line, the 100-day simple moving average over here, right? And so in my last video, I talked about how it's important for us to hold these support levels, not only the Fibonacci levels, but also the moving averages. So I talked about how this silver line is our short-term moving average, right? The 50-day simple moving average, which has basically held this entire rally from October when we broke out until now. We've either stayed above it, or we've come down and bounced above it, bounced on the line when we come down and touched it over here and over here. Now, last week we basically failed to hold this, which is why we came down so hard, and we retested our midterm moving average, which is the 100-day simple moving average. On Monday we had this nice bounce, which was a bullish engulfing candle, and in our last video we had talked about how when we have bullish engulfing candle, we tend to, in the last couple of weeks, we tend to roll over before pushing up higher. Same thing here, tend to roll over before pushing up higher, and over here, roll over and then push up higher. Of course, we have a rejection from the resistance level of the Fibonacci channel, and we also had a rejection in holding the support level, our short-term moving average, the 50-day simple moving average. So I talked about how there's a possibility that even though we had this nice pump over the last 2 days, the rest of the week we could see this thing roll over like we did in the last couple weeks. We had similar price action, right, before pushing up higher. And talked about how every time we flip certain support or resistance level, for example, this used to be support level, now it's going to be resistance. So now that we're coming close to this support level, or once was support level, that's gonna it's gonna be resistance now. So we might see this thing price action kind of move sideways, maybe come down a little bit before we try to break through, and we might even hit this Fibonacci level resistance because we've had problems breaking through in the past. Come down a little bit before pushing up higher, and maybe we'll see it come down retest. But of course, that's looking way ahead, and we have to take this day by day, week by week. But for now, I'm still bullish on Bitcoin, especially since we had this really nice engulfing candle, and yeah, so that's what I'm looking forward in the next coming weeks. Now, if we do end up rolling down and we don't hold this level, then of course this Fibonacci level should act as strong support. If we somehow, and I think it's possible, but I think it's low probability at this point, but if we somehow aren't able to hold this and we do come down, we should be able to hold this longer term moving average, which is our 200-day simple moving average, right? We talked about in the last video how in our previous bull run in 2017, so this is 2017 from here all the way to our peak, and we're just under 20,000. When the price came down, even though we did dip below the gold, our midterm simple moving average, the 100-day simple moving average, a couple times, we still held above the blue line, which is our 200-day simple moving average, our long-term moving average, right? We still always held above, and as we became more parabolics, these pullbacks became more shallow, and they would touch higher and higher moving averages, right? From gold to silver, eventually we come down, we don't even touch it because we're going parabolic, right? It's just going straight up, right? And that's when we have just FOMO from everybody, and then eventually the crash of the bubble, right? And that's what I expect to see for the remainder of the year. Eventually, this price will continue higher and accelerate until it becomes more parabolic, and we're going to be moving way away from these moving averages, and that's when I'll definitely update you when that happens, but that's when I'll think about selling at least my positions, right? I talked about in my last video how I bought below 50,000 over the weekend. Now, again, full disclaimer, yesterday I did add a little bit to my call options for my mining stocks. Riot and Mara. Of course, that's my own decision. Don't copy my trades. Always do your own research, your own due diligence, but just trying to be transparent with you guys. I do expect this thing to maybe consolidate for a while, but even if we break above, consolidate, because we've failed to break through these last 2 times, right? So usually we might face some resistance again. But yeah, so that's what I'm looking at for Bitcoin in the short to medium term. Obviously, in the long term, I do expect Bitcoin to continue higher and surpass $100,000 before the end of the year. But of course, the path to 100,000 isn't always so simple, right? And so we want to try to navigate the market and see what the price action is telling us, where the price may be headed. So just really quickly, MACD looking really good, right? We're printing lighter red candles, which is what we want to see in a trend reversal, right? Over here, here, here. So they're looking very good right now. We want to see this cross bullishly over here, and then see the MACD push towards positive territory, and finally break above this descending MACD trend, right? Same thing with this RSI. Been in a downtrend for a while. We want to see the RSI push and shift the momentum to the upside, right? We want to see more buying conviction coming in and heavy volume as we push up higher, and that's going to set our oscillators to more bullish territory, right? Right now we're getting close to neutral, but we want to see it push up higher. Dollar, we talked about how the dollar correlates with Bitcoin, and when the dollar comes down, that tends to give Bitcoin more strength to move up, right? We talked about in previous videos how during the years where the dollar has strength, like in 2018, we had a bear market in Bitcoin, right? But in 2017, when we saw the dollar come down, we saw Bitcoin had this spectacular bullish move up. So we want to see the dollar continue going down, and so far it seems like the trend is continuing to the downside, and perhaps can continue lower if we fail to hold this support level, right? We continue down and we break support, we might actually see the dollar come down and break this multi-year floor, and that can definitely give more fuel for Bitcoin, and really anything pegged to the dollar like stocks, real estate, gives it more fuel to go to the upside, right? Okay, so the last thing I want to talk about is the Pi second top indicator, and this is very interesting because we talked about this in previous videos, how when we have a cross, that tends to either call a bear market like we did in late 2017 and late 2013, or in April of 2013, it calls a short-term correction, right? And we talked about how we had a cross a couple weeks ago over here. We had a cross, but the interesting thing is, like, we've had another cross a couple days ago, right? So we crossed here. So when the green line is above the orange line, that's bullish. But when the orange line is above the green line, that's bearish. However, we had a cross back into bullish, right? So green line above orange line. Now the interesting thing about that is that in the past, it's taken us a while for us to cross back into bullish territory. Like the fastest was back in April 2013, where we crossed here, and then we crossed back in bullish territory. But the rest of the time, back in 2013, it took us a while to cross back into bullish territory, which is when the green line crosses above the orange line, right? When the orange crosses above the green, that's usually when you want to start to sell, right? That was 2013, and this is 2017, right? It took a while for us to cross back, green above orange. But right now, we've crossed back within a couple days. So this is very interesting. This hasn't happened in the past, at least for this indicator, right? And also another thing to look at is the fact that when we cross, the price is above the lines, right? Whereas in the past, when we crossed, this thing came down pretty hard, right? So when this crossed bullishly, the price was under, right? When this price crossed bullishly, the price was under the lines, right? And yeah, so under the line and under the line, the price underline. Now, the interesting thing is that we've crossed back into bullish territory, but the price is actually above the line. So what does that mean? Obviously, we don't have enough data. This thing was created in 2019, right? We don't have enough data, even looking in the past, to tell us what that might mean. But I think that if the price is above instead of below when we cross bullishly, that could possibly, and this is just speculation because we don't have anything historical based on this indicator to tell us what may happen, but it does seem more bullish than bearish, right? So just speculating, this could actually be a positive thing, a bullish thing, right? This could be perhaps a sign that this could be the time to buy back in, right? Because generally speaking, when the green line is above the orange line, historically it's been a good time to buy, even though the timing isn't perfect, right? Obviously the price went down more here, but all these times, like we just said, the price was always below the lines when it crossed back bullishly. So it's very very interesting to see what this indicator, or how the price will unfold, and how this indicator will develop going forward in terms of predicting whether this is the short-term bottom and whether we can continue higher. Personally, I do think that, like I said in the past videos, I don't like to rely too much on one indicator. I like to look at confluences of multiple indicators to really strengthen and give more conviction to certain theses. So for me, like I still think Bitcoin is bullish, and I still think we're going to go up higher. I can see us consolidating for a while, but like I said, if we just look at the price action, definitely going to be some resistance coming up to this level, because we failed to hold this as support. Now it's resistance, right? But eventually I want to see us break through and continue higher. And so it's very interesting to see this Pi socket top indicator. It's still a new indicator, right? It's not that old, but we haven't seen something like this happen where the price was above when we crossed bullishly. So that could possibly end up being a bullish sign, possibly a sign to enter. Obviously, I'm not 100% certain, because we really don't have enough data and historical data to tell us what this might mean. But just speculating here, it could possibly be a sign to buy in. Of course, do your own research, make your own decisions, right? This is just entertainment. This is not financial advice, right? I'm not a financial advisor or anything like that. So always do your own diligence and make your own decisions. And we'll definitely update you on Bitcoin going forward. And hopefully by Friday, our next video, we're able to break above this 50-day simple moving average line and get closer to breaking this major resistance level, which is around like 63 to 64,000, our Fibonacci resistance level, which we were rejected here and here. And I think that if we can break above that level, we're going to get closer and closer to our next resistance level, which is around probably 80,000. And eventually the big psychological number, which is 100,000. And if we could break that, oh man, there's going to be FOMO, there's going to be people on the news talking about Bitcoin, and it's going to be like 2017 and 2013 again, where your friends, your family are going to be talking about Bitcoin. It's going to be crazy. But for now, I think things are cautiously optimistic. I'm cautiously optimistic, and I still think that there's more fuel for Bitcoin to go up higher. But again, we'll update you as the price action develops, and definitely come back and see if this thing can hold and continue higher, or if this thing will fail and roll over. Thank you for watching this video. If you found it helpful, informative, useful, please like this video, leave a comment below, and subscribe for updates. Thank you again, and I appreciate your support. Have a great day.